Welcome to Day 81 of Future Business School's Daily MBA. Today, we'll focus on the telecommunications industry, specifically Vodafone, one of the world's largest telecom providers. We'll explore how Vodafone successfully expanded its operations globally while managing complex regulatory challenges in different countries. Vodafone's journey offers valuable insights into the intersection of technology, global strategy, and regulatory management. Introduction to Vodafone. Founded in 1984, Vodafone is a British multinational telecommunications company headquartered in London. Initially focused on mobile services in the UK, Vodafone quickly expanded its footprint to become a global telecom leader. The company's growth strategy involved entering new markets through acquisitions, partnerships, and strategic investments. Today, Vodafone operates in over 25 countries and has partner networks in an additional 40 countries, serving over 300 million customers worldwide. Vodafone's journey, however, hasn't been without challenges. In the highly regulated telecommunications sector, Vodafone had to navigate various legal, regulatory, and political hurdles to maintain its global presence. Global expansion strategy, acquisitions, and partnerships. Vodafone's global expansion can largely be attributed to its aggressive strategy of acquiring established local telecom operators and forming strategic partnerships in new markets. Key acquisitions. Mannesmann, Germany, 2000. One of Vodafone's most notable acquisitions was its takeover of the German telecom giant Mannesmann, valued at around $180 billion. At the time, it was the largest corporate merger in history and helped Vodafone cement its presence in the European market. Vodafone Idea, India, 2018. In India, Vodafone merged with Idea Cellular to form Vodafone Idea, one of the largest telecom companies in the country. This strategic move helped Vodafone navigate the highly competitive Indian telecom market, but also presented regulatory and financial challenges as the industry faced pricing wars and government regulations. Verizon Wireless, United States. Vodafone held a significant stake in Verizon Wireless, one of the largest mobile carriers in the US, before selling its share for $130 billion in 2013. This exit was part of Vodafone's strategy to focus on emerging markets and data-driven services. Strategic partnerships. In markets where direct acquisition wasn't feasible, Vodafone formed partnerships to gain market entry, partner networks. Vodafone established partner networks in several countries, allowing it to extend its brand and services without direct ownership. Vodacom, Africa. Vodafone holds a majority stake in Vodacom, the largest telecom company in South Africa, which has expanded its services across several African nations. This partnership has allowed Vodafone to tap into the rapidly growing mobile markets across Africa. Regulatory challenges, navigating complex legal landscapes. Expanding into international markets requires telecom companies to comply with local regulatory frameworks, which can vary greatly from country to country. Vodafone's global reach has meant dealing with a wide array of regulatory challenges, from spectrum allocation to data privacy laws and tariffs. Spectrum allocation and licensing. In the telecommunications industry, acquiring the necessary spectrum, or radio frequencies, to operate mobile networks is often the biggest regulatory hurdle. Governments control spectrum allocation, and telecom companies like Vodafone must participate in often expensive and competitive spectrum auctions. India. Vodafone faced significant challenges in India regarding spectrum auctions, government taxes, and legal disputes over licensing fees. The Indian government's retrospective tax demands led to a high-profile legal battle, with Vodafone contesting a $2.1 billion tax claim. This issue highlighted the regulatory risks associated with entering emerging markets. Europe. In Europe, Vodafone had to navigate differing regulatory environments in various countries, including strict spectrum licensing requirements and pricing regulations. data privacy, and security regulations. With the advent of 4G and 5G services, data privacy has become a critical issue. Vodafone has to comply with stringent data protection laws in many of its markets. GDPR, Europe, the General Data Protection Regulation, or GDPR, in the European Union imposes strict rules on how companies collect, store, and use customer data. Vodafone had to ensure its operations across Europe were fully compliant with GDPR regulations to avoid heavy fines. Emerging markets. In countries like India and South Africa, data privacy laws are still evolving. But Vodafone has to stay ahead of regulatory changes to ensure compliance while also safeguarding customer data. As competition intensified in developed markets, Vodafone shifted its focus to emerging economies where mobile penetration was still growing rapidly. This pivot allowed Vodafone to tap into massive, underserved populations, particularly in Asia and Africa. India represented one of Vodafone's largest emerging markets, with a population of over 1 billion people and rapidly growing mobile adoption. Vodafone's merger with Idea Cellular was a strategic move to capture a larger share of this booming market. However, the Indian telecom industry is highly competitive, with the entry of Jio creating a price war that squeezed margins for all players, including Vodafone. The regulatory environment, along with fierce competition, made it difficult for Vodafone to maintain profitability in the region. Vodafone's majority stake in Vodacom has allowed it to expand in Africa, a region where mobile technology has leapfrogged traditional infrastructure, making mobile phones a critical tool for communication, banking, and commerce. In countries like Kenya, Vodafone pioneered mobile money services through M-Pesa, allowing users to transfer money via their mobile phones. M-Pesa has become a financial lifeline in regions with limited access to traditional banking services. The African market continues to present significant growth opportunities for Vodafone, especially in sectors like mobile internet and digital services. 5G technology. Vodafone's future strategy. As the global telecom industry transitions to 5G, Vodafone is investing heavily in 5G infrastructure to stay competitive and meet growing demand for faster data services. 5G will enable innovations in areas like autonomous vehicles, smart cities, and the Internet of Things. Vodafone's strategy for 5G includes European rollout. Vodafone has been actively rolling out 5G services across Europe, aiming to provide faster and more reliable connectivity to customers. Emerging markets. In emerging markets, Vodafone plans to leverage 5G to expand its digital service offerings, including mobile banking, remote healthcare, and e-learning. However, rolling out 5G comes with its own regulatory challenges. Governments are still working on allocating spectrum for 5G services, and telecom companies must also navigate public concerns about the health effects of 5G infrastructure, which has led to protests in some regions. Managing political and economic risks. Operating in multiple countries exposes Vodafone to varying degrees of political and economic risk. For example, Brexit. Vodafone, being a British company, had to adapt its strategy following Brexit, particularly with regard to its operations in the European Union. The company had to navigate potential changes in regulations and trade agreements. Currency risks. Vodafone operates in multiple currencies, making it vulnerable to exchange rate fluctuations. Managing these currency risks is a critical aspect of Vodafone's global strategy. Key takeaways. Acquisitions and partnerships. Vodafone's global expansion has been driven by strategic acquisitions and partnerships, allowing it to quickly establish a presence in new markets. Regulatory challenges. Operating across multiple countries means Vodafone has to navigate complex regulatory frameworks, particularly around spectrum allocation, data privacy, and competition laws. Emerging markets. Vodafone's focus on emerging markets like India and Africa has provided significant growth opportunities. though these regions come with their own challenges, including intense competition and regulatory hurdles. 5G and future growth. As 5G technology becomes the new standard, Vodafone's investments in infrastructure will be crucial for its long-term success, especially in offering advanced digital services. Thanks for watching Day 81 of Future Business School's Daily MBA. Be sure to like, comment, and subscribe, and join us tomorrow as we explore another exciting business case study.